All right, my trade fam, what's up? We are back January 10th. It is 1:04 in the PM, and we've got our trades on. I wasn't able to record prior to, had some other stuff to do, but here we are. So I just made my second trade. So I've got basically a iron condor put on. The day's been pretty sideways, pretty uneventful, honestly. We had a little bit of motion earlier on in the day around 10-11 o'clock time frame, kind of put in a high and a low and really stayed within that range for the most part. What I was trying to do early on was I was trying to see if we were going to break out of either of these ranges, and we did not. We were forming a pennant early on, but the market kind of just went sideways through it. But it did start to show some activity. So early on, we were kind of in this kind of thing right here where, you know, we were making lower lows, but we were also not really making, lower highs, not lower lows. We were making lower highs, but we were also kind of making higher lows a little bit. So we were kind of forming a pennant, and it came to a head right around these two bars right here. Let me see. So we can see what's going on. All right, so we kind of came to a head with that pennant right around these two bars, and the market started to show a little bit of life right here. So the first thing it did, it dove down, and it kind of blunted itself, you know, dove down to about right here, and then it kind of just blunted itself right here. So at this time, it's this point in the day, this is right around 12 o'clock. I like to get my trades in if I'm going to trade that day around no later than 12:30 ish. So I said, you know what, I'm going to take a chance today. I don't really have that many confirmations. We're not really doing anything in the market. The stochastics is still, we're kind of range bound so far today, and half the day is already gone. So I'm going to take a chance. If I can get far enough away from the market where I'm comfortable, I'll take a chance on it and see if we can slip in there. So I did see a 38.40. I had my eyes on, I think, 38.45 for most of the day. So when 38.40 came available on this red bar, I went ahead and took it, because that's about 5 to 10 points further away than I was looking at, you know, for most of the day. So I went ahead and took that. Turned out to be a good trade because we got this green bar right behind it, which never happens to me. The market always drops on me when I sell a put spread, which I was expecting, but it just didn't do that today. So thanks. But we got this retracement bar right here, which kind of established a slight uptrend from there, as you can see. But when I got this secondary bar right here, which broke out of this resistance area, initial resistance area, I was like, oh, I might be able to get in a call today. So, you know, I was waiting to see if we can get above this line right here. Let me see if I can turn this into a line, something like this right here. So I wanted to break this area of resistance right here, this resistance point, before I decided to, you know, add this to my list of confirmation that we're not gonna, you know, continue down or something, and we're kind of in a slight uptrend. And it did. And when we got this rejection right here, it's not really a rejection, but, you know, this red bar right here, I was like, you know what, it's already 12:40. It's kind of past my trade time, running down the clock on the day. So decided to take a chance on a call, you know, while this bar was still up here, because again, I was able to get further away than I originally was looking at, because I was looking at a 39.40 early on in the day, but 39.45 became available based on this set of bars right here. So I said, okay, well, I'll take that too, and see how that works out for us. Even though we're in an uptrend, even though stochastics hasn't really turned, we've been trending inside of this day. So I figured, since we're running out the clock, as long as the market doesn't start trending too soon after I make this trade. Like if the market goes sideways a little bit, then starts to trend up or down, we should be fine. So as long as the market wants to stay within this range, gets rejected maybe one more time or two more times before it wants to continue upwards, there's a pretty good chance that this trade is going to work out. And we've got this pivot in the way on the upside as well. Or not this, I'm sorry, this pivot, excuse me. This is just another line that I drew. But we've got this pivot point in the way. We've got the daily pivot in the way, which is this blue line right here. So we've got two pivot points, natural lines of resistance. We've got the high today, which is going to be resistance as well, that it's going to need to break through. So it's got a lot of work to do if it wants to start threatening the call way up here. So I decided to go ahead and chance it based on that information, and that's where we're at right now. So we'll see. And I was able to get 100 wide. I like 100 wides. I like 100 plus wide condors overall. So let's take a look at some stats to kind of see where we are. Like I said, it's 100 wide condor. So actually 105 wide condor. We were able to, because we legged in, we were able to get an additional 12, 13 points of space in the middle of our condor that we otherwise would not have been able to get. As far as distance from the market at the moment, the call is 1% away, which is pretty good for this late in the day. Like I said, we've only got like 3 hours left for the market to jump 1%. And then on the downside, we are 1.7% away, which is even better. So that's great. One thing I do want to show you guys is that box spread that I was talking about. If I wanted to go ahead and take profits right now without triggering the pattern day trade rule. So we've got our spreads right here. We are in profit. So I'm going to take, I guess the put one is further away. So if I wanted to close out the put now, I wouldn't do this because the call is closer than the put. So I need to leave the put alone or just close out the put, because if I lock in the put, then I won't be able to roll if I need to. So you have to consider that as well when you're doing this stuff. If you have a condor on and you don't have enough money to put on more trades themselves, then you need to leave the other side of the trade available to close out. So it doesn't prevent you from rolling, because if you try to roll and you've got the other side of the trade on, you're not going to be able to, because you don't have enough money. So let me see, put spreads right here. So if I was going to consider rolling my call spread, I may not even be able to, because our put spread is sitting at zero bids. It's at a 5 ask and a -5 bid. So we might be able to close it out because there's still at least a market. It's not gray like these numbers are. So the numbers are still moving. So we may be able to close it out. I'm not sure. But if I start to feel threatened, that's the first thing that I'm going to do, is I'm going to try to close out this put spread, right? Excuse me. Yeah, close out this put spread right here to free up the ability to manage this. But let's say I wanted to go ahead and lock in the profits from this put spread right here. What I would do is I would sell. See, we're at a 38.40 put spread. I need to sell the exact same call. So I set this up to sell. I'm getting a price of $4.95 to $5. I want to sell it at the $5 if the market lets me. If you see a 505 print, the market just isn't going to let you do that, because that's arbitrage. It's not going to happen. But $4.95 to $5, I want to try to get $5 for it, but I'll settle for $4.95 because that'll lock me in at a 5 cent less profit than what I'm at right now. I think I sold this for 20 cents. So it'd be a net 15-cent gain on this if I locked it in. But this is all I would do, is I would come over here, make sure I've got the same exact strikes, 38, 40, 30, 35, 38, 40, 38, 35. It's a sell, it's red. the negative, the short strike is going to be opposite the short strike for your put, but don't let that confuse you. Just make sure the numbers are the same and the thing is red, because you'll get confused if you think about it too hard. So $5, same strikes, it's red, it's a sell. Confirm and send. It'll show you all of this. Boom, boom, put it in, and you're locked in. All right. So no matter if the market goes down to 3,800, whatever it wants to do, this profit's locked in at that point. What you're going to see is you're going to see an increase in your cash by $500 as well. Don't let that confuse you either. Okay. That'll go away tomorrow or whenever the market resets or whatever. Right. So that's how you lock in. It will not trigger the PDT. And you can also do the same thing for the call spread. So if I were going to do it here, I'm at a 39.45. I just sell the 39.45, the same one. Boom. You're going to get the same kind of similar setup. You want $5, but settle for $4.95. We'll, just take $5 away from you, from your profit, if that's what you can get, if you can't get $5. But same thing, and that'll lock in wherever you're at as far as profit on the call side as well. That's how you can avoid the PDT. Do I want to do that? I don't know. I don't like doing it for some reason. It just burns my soul. But that's how you can do it. Or you can trade futures. All right. So that's where we're at. The market is luckily cooperating with us right now. We are getting that rejection that I was hoping to get, at least one rejection to buy us some time. So what you're seeing here, just to explain what you're seeing here and what all this stuff is right here. So this diagonal line, I'm gonna just delete this because we don't need this anymore. Both of these diagonal lines are basically my profit lines. So if the market is trading above this line for the call, that means I am skewing towards getting my call taken out. It's not perfect actually. So if the market starts trading above this line, like if it's trading around here but I haven't been breached yet, then that means the market is currently trending towards a breach, trending towards taking out my call. If it's trading below this line, it's trending towards having me expire worthless, which is what I want. Okay. So anything below this line, I'm good for the most part. Now the market could always, jump up into the other side. So if it's trading like close, it doesn't mean like, oh, I'm good, I can rest. But if it's trading, down here at this time of day or something like that, the deeper in this area, obviously the better, right? The more you can relax. But this just gives me like a demarcation line so I can kind of detect early on, like if the market is trading around here or something like that, and, we've got this much time left in the day, then it helps me make a decision. Do I want to close out this trade? Do I want to roll? What do I want to do? Because right now the market is trending to breach me, right? Same thing for the bottom, same thing for your puts. If the market is trading in this area, something like that, anything outside of here, you're currently trending to expire. But if it's trading below this line, then you're trending to get breached before the market closed. So this is what I mean when the market is running out of time. The more time goes on, the more this kind of alligator mouth widens, and the better it is for me if the market is between these, because it gets wider and wider and wider as the market goes sideways, which means the market has to do more work to come up to here or down here to take me out or to threaten me. So that's what that is. Obviously the green area is my profit zone. The edge of this square is where I traded, the time that I traded this particular option. And then the bottom is the price that I traded it at when I traded it. So I got into this put at when the market was at 38.89, and I got into this call when the market was at 39.03. And this red line and this red line, basically where my alerts are. I have my alerts in Thinkorswim and not in TradingView because I can only put in one because I'm not paying the premium stuff. So this is basically where my alerts are. You can see down here where I put my alerts, and I just put my alerts 20 points away from where my short strike is, just to give me a heads up so I can decide what to do early enough. So there's that. So right now my thesis is if we can get a rejection, which we did, if we can get the market to just play around here for a little bit, it'll give this alligator mouth time to widen. And with time to widen, it's going to start putting the market up against the wall as far as trying to take me out. And it'll buy us enough time to where the market has to do more and more extreme things to breach my contract. So if we get a rejection off of here, which we did, maybe we'll fall down to another support level down here and get a rejection off of that. And you just ping pong through the rest of the day, and then you can do whatever you want at the end. So that's where I'm at right now. We'll see how that goes. Right now it's working pretty good. And we had Jerome Powell this morning. He declined to say anything about monetary policy, which is great. So the market didn't do anything crazy. So the next thing we have to look forward to is CPI on Thursday. So I do expect a little bit of volatility tomorrow in anticipation of this because it's at 8:30 before the market opens. So I do expect a little weird stuff to go on tomorrow, but we'll see at that particular time. That's it for now. Let me know if you got any questions. Appreciate you, and we'll check back in after the market closes. All right, guys, what is going on? We are back, and it is after hours. Market just closed 6 minutes ago, and here's where we ended up. You can see that we ended up right inside our alligator mouth, and what I was talking about earlier, where the market kind of bounced around and kept getting rejected to buy us more time before it did whatever it wanted to at the end of the day, came through. So I did expect for the market to kind of jump and be a little bit more volatile in the last few minutes, and it definitely was. But by the time we got to that point, we were so far apart that the market just ran out of time to do any damage to us. So that was another successful iron condor, legged in iron condor day today. And we never even got to the point where I was going to look at the market to decide if I was going to roll or anything. So that was this point right here. And the put was never threatened in the entire day. So that made me happy as well. So that's where we ended up. Market ended up at 39.19. Let's take a look over here. You see our $25 came in nice and clean. So we are currently at 816, which I believe is around 65% gain. So that is 65% within, I think I started 10 trading days ago. Yeah, about 10 trading days ago. So that's an average of about 6% or so per trading day, which isn't that bad. You know, I'll take it. So what else did I want to talk about? There was something. Oh yeah, I wanted to come over here and just kind of look at where we are on our wealth building chart. And we are about, what is it, 816. So we are about right here-ish. Yeah, 60, a little less than 64%. So we are trucking along, on our way to get our first new contract paid for by the market, which would make me very happy. So the way I am now, I am going to probably start being extra careful. From here on out, there might be some obvious trades that I don't take, because the more my history or my past has shown me that the closer I get to a milestone, the more dangerous things get for some reason. So the more I'm like anticipating, I'm almost there, I'm about to grab it, the market finds a way to snatch it away from me. So I'm probably going to try to err a little bit more on the side of caution. And you can kind of see that in my trading lately anyway, with waiting for confirmation, because, you know, a younger me would have definitely gotten into the market much earlier than this. Like, I know somebody that got into the market earlier on the day when they saw this action right here, and I just wasn't about to do that, just because you never know when it's just going to keep going down or whatever. I want as much confirmation as I can get. I didn't even get the confirmation I wanted today to make these trades, but it was just so deep into the day that, you know, it seemed like a pretty good gamble to go ahead and get in. So tomorrow should be a pretty weird day because we're anticipating CPI, which is in control of the market right now. And that's pretty much it. I mean, we got crude oil. The market doesn't really care about energy right now, and the market doesn't really care about bonds right now, but we'll see what happens with that. I'm going to make a video talking about what we do as we get further and further into our wealth building, because I think for me, that's what sets me apart, and what's going to set this channel apart is talking about what we do at different account sizes. How do we adjust? What are we doing different as we cross certain thresholds so that we can protect our nest egg that we're building and not lose it all? So I think I'm going to dive into that in the next video. I may or may not record it right after this. I'm not sure. So that's where we're at for today, guys. Closing out January 10th, and we will see you tomorrow. All right, peace.